Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we are coming to you live from the CNBC TV 18 Motilal Oswal studios, and the roller coaster continues. We'll get into the details in just a bit from now, but I think it's sufficient to point to Surabhi's dress color. Yesterday it was green, today it is red. So, morning, guys.
I had nothing to do with it. It was selected by our very able wardrobe team. But this is all I've been hearing since morning, that it's this wrong color that I've picked today. Well, it's like you embrace what's going on. Beyond the point, you just embrace it. So it's fine. Red, green, it's all part of life.
So yesterday you wore green, right? And,
yes.
And markets were red.
So ended red. Flat, no? Recovered from the opening gap.
Yeah,
I don't know. Anyway.
But today is going to be an interesting trading session because India has underperformed and now you have the global markets that are in a tizzy. So how much of the bad news is already in the price for India? Well, today is going to be that crucial session, I think.
Absolutely. And I think, in the US, the debate still continues because, and that debate was interrupted last Friday when the market bounced very strongly. The debate all of last week and maybe the last fortnight has been that whether the US has entered into a bit of a correction. And it looked like that. Then Friday, the market bounced about 2.5–3%, right? And a lot of people went over the weekend were saying, well, the market's being bought into, the dips are being bought into, etc. So, but last night, look at what's happened. The market fell again, the US equity market, that is, down about 1.7 on the S&P, Nasdaq down about 2.7%. Wix was back above 22, which is a 16% jump, the CBOE Wix index. 10-year yield lost 5 basis points. I mean, it's remarkable how quickly bond markets have repriced, right? Bond prices have gone up, yields have fallen, and we're at about 4.16%. I think we have lost maybe 50–60 basis points in the last 1 month or so. So it's just incredible. And that's essentially pointing to nothing but fears around tariffs and what that will do to growth in the US. Dollar index about 106.56. Data which came through from the US continues to be sobering. And over the last 10 days, high-frequency data, starting with US services PMI, we mentioned that number with regards to the Atlanta Fed GDP now. That's a GDP projector for the first quarter, which had turned negative. I think it's turned even more south. So, stagflationary concerns on the back of ISM manufacturing data, which came out last night. That's the latest one. And why? Because prices paid sub-index surged. So prices went up. And new orders and employment sub-indices within the ISM manufacturing, that actually fell. And, prices are higher, growth is lower. And hence fears about whether we are entering a bit of a stagflationary zone, not using that word lightly, but it's just sort of, something which kind of was the overlay, at least last night. Now, in terms of tariffs, and they come in thick and fast as well. Today, of course, was the day when tariffs go into effect, Canada, Mexico, China, and looks like they are going into effect. So China's extra 10% tariffs on top of the 10% which is already present is going into effect. And, the executive order was signed. So the order said 10%, it's been replaced. The 10 has been struck off and instead 20 has been put in. So, the 10% extra on China has come through. By the way, the response from China has been, the fact that they've obviously strongly opposed it, but there is no action yet. They're saying, well, let's get into a dialogue. I mean, it's more conciliatory in that sense. Before a dialogue, will China want to do something it's obviously going to be a negotiation. So we'll see. Trump, of course, also confirmed that 25% tariffs on Canada, Mexico are coming on Tuesday as well. There was a specific time which was mentioned, I think our time 10:30, but it was given earlier that these tariffs will go into effect. So we'll see if last minute something comes around. But I think Canada has already retaliated and imposed tariffs on the US. So again, a very, very fluid kind of situation out there. It's all, of course, taking into effect today, all these tariffs, etc. And remember, China, of course, is the big one. It was widely anticipated. But Canada and Mexico are some of the closest kind of sort of trading partners for the US. and their next door neighbors as well. So the impact actually perhaps could be significantly large if these tariffs are put on for a long period of time. Oil prices about 2.5% lower, we're about 71. And this is not because of Russia, Ukraine. There was an OPEC Plus delegate who announced that the group will increase oil output in and beyond April. There's more oil in the market perhaps. In India, just to sort of tie in the levels, etc., it's a lower start, and I'll refer to the GIFT Nifty in just a bit. We are still waiting for a positive daily close. Look at the close yesterday, almost there. And of course, from the lows of about 22,004, it was a decent bounce back. This morning is going to be, of course, lower. So a low of 20, which is yesterday's low, which is 22,004, is an important level. We'll sort of work with that first up. Below that, as I said yesterday, between 21,800, 21,900, there were multiple lows which were made and respected in the middle of 2024. So between 21,800 to about 22,000 is the broad support zone. And of course, the upside, the 40-hourly exponential average, which is 22,400, is the resistance. Nifty Bank yesterday tested the previous low of 47,844 and then bounced a little bit. Resistance for the Nifty Bank stands at about 48,675. So we'll see if the levels on both these indices are respected, despite the very, very red screen that we've got globally speaking. So 160 points lower on the GIFT Nifty. Surabhi.
Oh, absolutely. It's this tariff trauma that's getting a little real now, isn't it?
Yeah.
Because, I mean, when Trump took office, there was all supposed to be, a brinksmanship, but now those numbers are becoming a reality. And that's what sparked what is not just a global equity rout, it's a global risk-off across asset classes, whether it's bonds, whether it's the moves in the dollar, or whether you're looking at what's happening, for instance, in cryptocurrencies as well. And I'll come to that in just a bit. First, let's look at the Asian market rout. Now, markets are down anywhere between about 0.3% in Singapore. Singapore is actually relatively the best market in the region right now. To Japan, the hit on Japan is quite big, almost 2% there. The Hang Seng's opened weaker as well, 1.5% on the lower side. Actually, on tariffs, I just want to point out, what the US president also said, and maybe why the Japanese market's taking such note of it. He went on to, slam both China and Japan, and he spoke about how they're using currency as a tool to perhaps enhance their export value. The quote is on your screen. He says, I've called President Xi and leaders of Japan to say you can't continue to reduce and break down your own currency. You can't do it because it's unfair to us. So that's what he's really talking about. He's saying it's difficult for us to make our Caterpillars and our tractors here in the US if you're using currency to your advantage. And, a lot of these headlines coupled with the reality of tariffs, it's really hitting the Asian region today. Okay, let's talk about why this is not just an equity sell-off. Like I said, even, cryptocurrencies, despite that announcement that came in on the strategic crypto reserve that Trump is going to make in the US, despite that, this whole uncertainty is hitting cryptos as well. Markets are down anywhere between 4-5% to almost 9%. The overnight tumble on Bitcoin was 9%. They're again down about 3%, 4% this morning, all the crypto assets. To add to the mix, you've got, of course, the Ukraine issue. And now it's official. This morning, we've got the news that White House has decided to stop all possible military aid to Ukraine. So it's very, very clear that this is not sort of ending anytime soon. So that geopolitical risk premium is continuing as well. Talk about some data out of Asia this morning. We've got the unemployment data from Japan. It's all right, slightly weaker than what the market would have liked to see, perhaps. Unemployment rate at 2.5%. The estimate was 2.4%. There's some data out of South Korea as well on retail sales, and that's also slightly weak. The key to watch is going to be the big Chinese meeting that kicks off this week. In fact, today we're talking about the parliamentary gathering, which is in 2 phases. And tomorrow is going to be the really important one because the National People's Congress, will start. And ahead of that, the expectation is that A, they'll lower their inflation estimate for this year to 2% because there's deflation very clearly entrenched in China. And B, the growth number is supposed to be around 5%. That's what the market's working with. But the bigger issue is, will China announce something more significant in the face of the tariff threats that are so real? Now it's 20% tariffs from the US, additional tariffs since President Trump came over. So let's watch for this. Now, for the Nifty, we're all bracing for that gap down, no taking away from that. I was looking at the election day lows, just for what it's worth. So we're 226 points away from the close of that day, June 4 close, 226 points away. That could happen, who knows if it happens today in the gap down. And then the actual intraday low, which was 21,281. That's about 3.5% or 3.75% away from where we are. So let's see. These are sentimental levels. You don't know if the market's indeed done with this bear hug or not. Doesn't look like it. Fund flows, finally, to round it off, Nothing very happy to report here. The selling continues, 4,800 crores of selling. Domestic buying is very, very heartening. Look at that number, 8,800 crores of domestic buying coming in, trying to provide support to the market. Let's see, I guess, Nigel, will need more of that domestic money to kind of recover from probably what will be an opening blow.
Well, on a day like today, you thank your stars that, in fact, the Indian markets have actually already underperformed. And the second factor is a high amount of crude into the markets will be good from an India economy point of view as well. So those are the two positives that I'm looking at. Now, India, yes, in the recent 6 months to around a year or so, we have underperformed even the emerging markets. But how do valuations stack up post the recent underperformance? Remember, on a 10-year basis, the Indian markets have done much better in comparison to the emerging market index. But post this correction, how are things stacked up? The India's premium to the MSCI emerging market, well, that's come down to close to around 59%. That compares with around 78%. On a PE basis as well, on a forward earnings basis, we are much lower in comparison to the long-term averages, which is at around 20.5. Currently, we're at around 18.6. And more than 50% of the Nifty constituents, well, they're trading below their long-term averages. So valuation-wise as well, a lot of stocks have come to those levels. Only the market cap to GDP number, well, that was at around 135% or thereabouts. That's cooled down to around 120%. So that's how valuations are stacking up as of now. A lot of factors are suggesting that the Nifty has gotten to that zone where it could see some kind of buying and some kind of bottoming out. And various stocks have come to those attractive levels as well. What did the FIs do in yesterday's trading session? Quite interesting, right? They sold in the cash market. But on index futures, they added more longs than shorts. Even on stock futures, they added more longs than shorts. Now, some part of this could be an arbitrage that's at play, but that's been the trend. They have been net long on stock futures, as you can see, while on the index futures, they're aggressively net short as well. So select stocks could continue to do well. Some part of that will be an arbitrage, but otherwise, in fact, there appears there is some long addition on individual stocks as well. That's another data point, right? SBI Securities, they had put out a note and they said that now only around 18% of the Nifty constituents are trading above the 20 simple moving average. And whenever history suggests that whenever that number comes down below 20%, you normally see a bit of buying and a bit of a bounce just in the near term. Price action will have to be monitored, but that's an interesting data point as well. Less than 20% of the Nifty constituents are trading above the 20 simple moving averages. So keep an eye out on that parameter as well. Moving to the options data, well, the 22,400 call, 21,900 put, extremely active in yesterday's trading session. And just looking at the options data and the recent moves that we're seeing, the important range comes up for you on the screen. The 21,800 mark, that's the important mark on the downside. The PCR as well is moving to in that band of around 0.7 to around 0.8 or thereabouts. Crucial levels. 21,800, very, very important that it holds out at these levels. And I expect the bulls to come in and fight at these levels if we get around there. However, the trend is still very, very weak. The structure is punctured. So we'll see resistance coming at around 22,500. You'll only get more confident once you get past that mark. On the Nifty Bank, yesterday we went to around 47,800. Well, that 7,500 is very, very important for the Nifty Bank. Did a relative underperformance. It needs to get back to its fighting ways as we've been seeing in the last few trading sessions. So it'll have to outperform yet again. And finally, before we wind down, I just want to pull up a few stocks. There are some factors at play which is beyond fundamentals, and that could be trading action. Tax harvesting, there will be advanced tax payments and also margin triggers. And that's why in yesterday's trading session, you saw a few stocks that fell on very, very low volumes and then bounced back. So just highlighting few of these stocks in yesterday's trading session that saw a big bounce of more than 10% from the lows of the day. And there could be more of the same just in the near term. That's because of the year-end phenomena as well as some margin triggers that are gradually getting out of the system.
Absolutely, Nigel, agree with that. The only point with tax loss harvesting is that you've got the whole month.
Yeah.
But people might say that there are more losses. We'll book more losses, then harvest them maybe by the 20th. You never know.
We could expect more of the same, I think, the next few trading sessions.
Yeah. Let's see. But eventually people do want to book those losses as well to offset against other gains. Perhaps maybe that could provide some comfort. Let's move on. Equity call of the morning coming in from Gautam Duggar of Motilal Oswal. He says the market correction has coincided with a slowdown in earnings growth as the Nifty 50 has managed only 4% profit after tax growth in the 9 months so far this fiscal year. That's FY25. He says the expectations for FY26 corporate earnings are still somewhat elevated in their opinion, given the underlying macro and micro backdrop, and are thus ripe for further downgrades. He says the recent correction in the broader market factors in some of the potential disappointments in earnings ahead. That said, he adds that valuations for mid and small caps are still expensive vis-a-vis their history, as well as vis-a-vis the Nifty 50.